Q2FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Dr. Praveer Sinha, MD and CEO, Tata Power. Thank you, and over to you.
Thank you. Good evening to all of you, and thanks for joining the call. On behalf of Tata Power, I would like to extend my best wishes to you and your family for a very happy and safe Diwali in advance. I'm joined today with my colleague, Sanjeev Churiwala, CFO, Mr. J.V. Patil, Financial Controller, Mr. Kasturi and Mr. Rajesh Lachani from Investor Relations, and other members from my corporate finance and corporate communication team. At the outset, let me talk a little bit about the power sector. We have seen that the power demand in the last quarter has gone up by nearly 13% compared to the previous year. And this increase in demand has been seen right through in this financial year. We have seen on a cumulative basis, there has been a growth of more than 10% this year, as was seen last year, where the growth had been 10% compared to the previous year. And I think the cumulative growth in last 2 years is nearly 22%, which is a record. The peak demand of power was 241 gigawatt, which was nearly more than 10% of the previous year. And we see that this demand continues to be very high even in the month of October. We expect that this will continue for at least another 2 years, considering that the demand has gone up not only for the industries but also for our commercial and industrial consumers, and including residential consumers, where a huge demand of air conditioning load has led to this surge in demand. Because of these reasons, the Ministry of Power has been trying to ensure that there is adequate supply of power in the country and has extended the Section 11 so that all the imported coal-based plants continue to operate and supply power. As also, they have mandated that the domestic coal plants also use up to 6% of the imported coal for purpose of blending, so that there is no shortage of power in the country. And I think this has given good results in the sense that the country has been able to meet the enhanced power requirement, where many of the other countries have struggled to do that. Moving to our financial performance, I am extremely pleased to share that this is the 16th successive quarter in which we have shown the PAT, and this has been based on very strong fundamentals of all our existing businesses, including new businesses in renewable and distribution in Odisha. This year, in this quarter, the consolidated PAT is 1,017 crores, which is a 9% increase compared to last year. Similarly, the revenue growth has been 9%, and the EBITDA growth has been 51% because of much better performance of all the plants, including the Mundra plant. And what we have seen is that in the half year, our PAT has gone up over 30,000 crores, which, if you remember, 3 years back, used to be our annual revenue. And our EBITDA has also grown to more than 6,000 crores, 6,092 crores in the first half of the year. And our PAT has grown by 6% on a half-yearly basis to 1,924 crores. This has been possible because of a large number of initiatives taken by Tata Power. We have been steadily working on our renewable capacity, where capacity additions have taken place during this quarter. And today our clean energy portfolio stands at 5,500 megawatts, which is nearly 38% of our installed capacity. This is on back of nearly 3,200 megawatt of solar, 1,000 megawatt of wind, and the balance being hydro and off-gas plants. And with another 3,760 megawatt under implementation, which will get completed in next 2 years, we will achieve an installed capacity of 9,300 megawatt of clean energy, which will be nearly 50% of our total capacity. So we have actually set up a very ambitious target that by 2030 we'll have 70% of our installed capacity will be clean energy. I think we'll be able to achieve, because this does not include the 2,800 megawatts of pumped hydro which we will be setting up in our hydro plants starting next year, mid of next year, when the work will start and it will get executed in 36 months thereafter. In all our renewable business, including large EPC, large-scale EPC business, our own utility, as well as rooftop and group captive, we have seen huge growth, and there is a huge pipeline of projects which are under implementation. We have also been able to start the trial production from our 4.3 gigawatt cell and module plant. The first of the module units have started the trial production, and we expect in next 2 to 3 months they will stabilize the module production, and the cell production will start in the month of January and will stabilize by March, April. So one of the big challenges of supply chain management and having a much better control on the input cost for solar plants will be taken care once this 4.3 gigawatt plant gets fully operational. In fact, we are the first one in the PLI scheme who have been able to start production, and we do hope that the 4.3 gigawatt, which will become the single largest manufacturing of solar cell and module plant, will get not only operational but will operate at a very high yield and throughput. Our other business, especially in our EV charging, has also been doing very good. We have nearly 62,000 home chargers, and we have nearly 4,900 of public chargers. We've also been able to implement a lot of bus charging facilities, starting from Kashmir up to various cities such as Jammu, Srinagar, and we have in Delhi, Jaipur, Ahmedabad, Bangalore, and Mumbai. So I think with widespread projects for bus charging, we'll see more and more public transportation also going to EV way. Our Odisha discoms have been doing very good, and we have a PAT of nearly 90 crores in Q2 and 154 crores in H1. We have been taking huge number of initiatives to clean up the data after the implementation of ERP, as also moving away from provisional billing, which is in few cases less than 5%, which will help us to bring better control and visibility in the billing and collection efficiency. We have till now replaced nearly 25 lakh meters in last 3 years, and it really shows that how a discipline is being brought in doing the right billing and collecting from the consumers. Our balance sheet continues to be very sturdy, with a net debt declining by nearly 1,140 crores in Q2, and our net debt stands at a very healthy 36,609, which means that our net debt to underlying EBITDA is 2.65, and our net debt to equity is 1.02, which is I think, a benchmark for infrastructure industry. We expect the capex to pick up significantly in the second half with large number of projects planned in Q3 and Q4, and we will be able to see many of them getting implemented, and the benefits of that will start accruing to us, especially in the utility scale and group captive projects in the subsequent year. We have been able to tie up the arrangement with the Zambia unit, where we had a 120 megawatt hydropower plant, which was not able to conclude the power purchase arrangement and receipt of payment. That has been resolved, and we have received a payment of 100. We have received the company has received a payment of 102 million, out of which our share is 50%. So we've received a payment of 51 million, and all this has led to a very solid balance sheet, and this has also led to the upgradation of Tata Power's credit rating from BA2 stable to BA1 stable. As you would have noticed, Tata Power is continuously now working to stabilize its operations and bring consistency in the performance, and every quarter we have shown improvement in our performance because of the stable operations of all our existing and new businesses. And this will go a long way in making the company much more stable and with a very healthy balance sheet. We would also be closely monitoring all our financial and operational metrics to ensure that there is consistency in the performance in the future quarters. With this, I would request Yashadi to open the floor for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Puneet Gulati from HSBC. Please go ahead.
Thank you for the opportunity and congrats on good numbers. Can you elaborate a bit more on what you are seeing in terms of profitability for Mundra and the coal mine separately as well?
Yeah, hi Puneet, and hi everyone. This is Sanjeev Churiwala, CFO for Tata Power. First of all, let me wish all of you a very happy Diwali in advance. I think in our previous calls, a lot of questions have been asked on the Mundra and the coal mines. So what we have done this time, for the benefit of all of you, we have included a separate slide which gives you the cluster-wise performance. If you have access to that deck, if you go to slide number 36 and 37, all the details are available for you. But just for the sake of your understanding, this year, when we see our EBITDA going up by 51% and PAT going up by 9%, that is in spite of our coal mining profits significantly going down. Last year, for the same period, the coal pricing was close to about $135 to $140, and we are now witnessing coal prices of about close to about $80. So our coal profits have significantly come down, but that has been more than compensated by profits coming from all our core business, including overall generation business, our existing thermal business, including transmission, distribution, renewable, new businesses like in Odisha and renewable. So I think which is a big shift that we kind of delivering, our PAT, almost 80% of that plus is coming from the core profit, and we want to continue delivering that. When it comes to Mundra is just a cost plus model under Section 11. So we're recovering all the cost. So it's just a little, under a normal PPA would have had a loss, and under Section 11 it's just a cost recovery. So of course there is no loss, but it's almost a break even on the PAT as well.
Oh, you're breaking even at PAT as well. Okay.
Yeah.
Okay. That's very interesting. That's very useful. And secondly, on the renewable side, there have been a lot of bids which happened during the first half of this year. How are you positioning yourself for that opportunity? Or you think the pricing is still quite tough and competitive intensity too high? If you can elaborate a bit there.
Our strategy is very clear. We're kind of still looking at delivering 1.5 to 2 gigawatts of renewable on an average. Even this year, we will be commissioning close to about 1 gigawatt of renewable. We already have a very healthy pipeline in terms of in terms of the wins that we had, including our group captives. So our focus when we look at overall solar is a combination of group captives, rooftop, and large-scale projects put together. In both of them, we have a healthy pipeline.
Hybrid projects.
And that of course includes hybrid and as well as RTCs. There's a combination of all of that.
Okay, so you don't want to build further pipelines right now the way some of the other peers have been talking about building 10, 20 gigawatt of potential pipeline?
I think when it comes to the long-term pipeline, in any case, we have set an aspiration that we will be delivering 15 gigawatt plus, right, in the next couple of years. As we speak, we already have a commission capacity of 4.23 and about 3.6 is in the pipeline. So overall, we're talking about an 8 gigawatt, space commission and under pipeline. Plus, of course, we have almost 3.6 gigawatt of overall pipeline capacity that is coming up. So I don't think that we are not building it up. We are kind of sticking to aspirations, and most likely with our aspirations for the pump storages coming through in the next 3 years' time, we're likely to want to exceed our target that we have set for ourselves.
Right, that's very helpful. And lastly, what stage are you on your pump storage business? Do you have all approvals, environment clearance in place, or still applying for the same?
See, all the approvals have been applied for. Some have been received.
Okay.
And we expect all our approvals to be in place by March, April. And that's why we are saying that we will start the work by mid of next year. Since this is in our existing reservoir and existing location where we have the hydropower plants, there's no fresh land acquisition or anything that is required, and we will be able to complete it in 36 months. So that's our timeline that we are looking. So mid-27, we will have the pumped hydro plants operating.
Okay, excellent. That's great. Thank you so much, and wish you all the best.
Thank you. We have our next question from the line of Apurva Bahadur from Goldman Sachs. Please go ahead.
Hey, thank you for the opportunity. Sir, if I see the financials, the Trust Energy has reported meaningful swing in profits. So just wanted to understand what's driving this and how should we view this business in future?
Yeah, so I think when you look at the Trust Energy, the way we are reporting here is basically entity-wise. Best is to look at the cluster-wise performance. But what is Trust Energy? Trust Energy is simply nothing else but the shipping company. So more coal we bring in, which is part of any case our coal cost. It is the profit attributed to the trust company. But best is to look at Mudra and the coal companies together. If you go to slide number 36 and 37, you can look at here. Go to 37, which is H1. Yeah. If you look at the line which says Mudra, coal and shipping, this gives you the combination of all the things, which includes the Mudra, which includes the shipping, and which includes the coal mines profit.
So it is completely linked to the volume of freight which we are moving and not to the shipping rates at all?
Yeah, correct. It's largely related to the volumes.
Okay, so in every quarter, whenever Mudra operates more, so sort of trust will make a higher profit. Understood.
Yeah. So actually, that is kind of a cost plus model. So we will not look at kind of that very small amount getting over there. It's best to look at the Mudra, coal and shipping, which if you look at slide 37, I'm sure you have access to that. You will find all the combined numbers here.
Sure, sir. So secondly, also if I see the same slide, I think eliminations used to be quite significant historically. I think that number is down meaningfully. I believe some part of it could be attributed to probably not utilizing own coal at Mundra, but I mean, if you can throw some light.
So elimination is basically all the intercompany thing, right? We are an integrated company. So, while overall numbers are only coming down, not going up in terms of elimination, but the fact is it all depends. Higher the intercompany transactions, there will be higher elimination. So I think the best way to look at it is post-elimination, because otherwise the numbers are sitting in the gross and thereafter there's an elimination. This is more of an accounting entry.
Understood. And I think, sir, lastly on the realization of dues from KPC sale and also from ITESI, so I believe that sits in reduction in the unbilled revenue in your cash flow.
You're looking at it particular, right?
The ITESI tariff order, right? Maybe a resolution which happened, I think 102 million, 51 for us, and also the receipt of.
That is not in the previous quarter. So the ITESI will come in the subsequent quarter. So so it is not in the previous quarter.
Okay, sir. And for Arutmin, we have received already during this quarter.
Yes, the Arutmin money has received. And your question was ITPC. ITPC have received the money from its procurer, that is JESCO, right? And we have received our dividend this month. So nothing is reflected in September, but the profit will be reflected in quarter 3. And will not be shown as receivable because we already received the money.
Understood, sir. Thank you so much. I'll get back in the queue.
Thank you. We have our next question from the line of Shubhadeep Mitra from Nuvama. Please go ahead.
Good evening, gentlemen, and thank you for the opportunity. My first question is that in a scenario where we are looking at, let's say, Section 11 benefits continuing for an entire fiscal year, would the UNTP still be at net break-even or would there be profits?
No, I think as of now under Section 11, the whole idea of Section 11 is cost pass-through, right? So eventually the purpose is that whatever is the cost and the overheads are able to recover fully in the tariff. And hence, you will likely see a break-even scenario.
So this is at the net level. So maybe at the cash level, there might still be some cash profit. Is that the right understanding?
When we're looking at overheads and all, you kind of include all the index adjustments. You look at your depreciation. So yes, on a PAT level, it will be neutral. On a cash level, it will be slightly positive.
Okay, understood. And with regard to the long-term resolution on Mundra, are we looking at it following the lines of the Section 11 tariffs or thereabouts?
Yeah, something very close to that, so that the tariffs become more cost reflective. And so still under discussion, but I think somewhere close to that.
Understood. Secondly, with regard to the renewable business profit, which has certainly offset the loss of profits from coal and UNTP in this quarter. So on the renewable piece, clearly it's visible that I think the EPC side of the business is throwing up a good amount of profitability. So just wanted to understand that for this business, are we still looking at doing more third-party sales and hence this can continue to be a growth center?
So for renewable, typically you would see that we have a huge pipeline, 3,800 megawatt of projects which we need to commission apart from the rooftop that we need to sell. So and many of the projects will get completed in the next 2 quarters. So I think you can expect very good performance by the renewable business in next 2 quarters, as also in the next 12 to 18 months when many of these projects will get commissioned. So I think renewable business, you will see a huge improvement over a period of time.
Understood, sir. But my question was that if we are continuing to do more of self EPC, then in the consolidation it will get knocked off. So only the third-party related EPC would actually start showing up as your profits in the consolidated numbers. Just wanted some clarity on that.
No, but even when we do our own projects, there is a profit in that. So they work as separate entities. So the EPC business will have a profit on execution of those.
Yeah. In fact, even in this current quarter, more than 50% of the business and the profit that you see is basically coming from third party. So I think it's a combination of third party as well as in-house.
Understood. And on the coal front, with I think recent uptick in coal in the international coal indices, would you again see a jump back to let's say coal profitability over the next couple of quarters?
I think all indicators are showing that the coal prices possibly globally are stabilizing now. We have seen a sharp drop every month over the last 6 to 9 months. In fact, when we compare over 12 months, from about $135, $140 has come down to $80. And over the last few weeks, we are seeing the price stable in that quarter. It's unlikely that we will see a big swing going forward, but you never know what happens. We never predicted this kind of high prices a year, and then such a sharp fall drop again. So it's very difficult to predict, but as of now, we're kind of thinking that it should remain range bound.
Understood. Last question from my side. This would be with regard to the large tendering activity that we're seeing on renewables, whether it's solar or hybrids, etc. Is there any ballpark target number that you have or market share number that you have in terms of winning across this market size of maybe 30-35 gigawatts, which is under tendering?
See, the only ballpark is that there should be good returns on them. So that is what it is. If it is not a good return, then there is no point in taking orders. And you have seen that many of the developers took orders at 2 rupees and 199 and all that, and have lost money. So the only ballpark is we should get good returns. And also we are now leveraging more towards hybrid projects. So it's not just pure solar or pure wind, but they are solar and wind combination. They are solar, wind and storage combination, which we won yesterday. So we will be moving more towards complex projects which requires a combination of solar, wind, and once we have our pumped hydro, then we will be getting 24/7 renewable power.
Understood, sir. Thank you so much for answering my question.
Thank you. We have our next question from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good evening. My first question is regarding the trajectory of margins expected for TPSSL once the 4.3 gigawatt module cell manufacturing capacity will be commissioned by the end of the year. So for next year, what will be the bump up that you expect in margins here?
Mr. Kishore, may I request you to mute when you're not speaking? There's some background disturbance. Thank you.
I think when we look at EPC business per se, while in Q2 we are about 4%, that too in a very, very difficult environment situation where the cells and module prices have moved significantly. Our desire is to kind of deliver an EPC margin on 4%, about 5% in the EPC business. When it comes to cells and modules, of course, it's a combination of largely using in-house, where we ensure that whatever costs we have incurred, which is roughly about 4,000 crore plus, we get a decent return on that, right? So we will ensure that the cost plus markup happens to get back our return. We'll not link it directly to the EPC business per se, but we will be setting it up as a separate profit center.
Right, but ultimately it will get used up in your for the EPC projects as well as your in-house projects, and it would be reported under TPSSL. Is that right?
No. So when the manufacturing business starts, so the way it is, for almost 2/3 of the production, which is 3 gigawatt, that will be used, of course, in-house. So TPSSL will buy that material from a new manufacturing plant, and then it will be basically be billing to our large-scale utility project, and that's the way we want to do. So we already have a new company called TP Solar, which is in Tamil Nadu, where this 4.3 gigawatt setup is coming through. And of course, that company might also sell 1 to 2 gigawatt depending upon the need in international market and domestic market. And whatever profit it comes over there will be sitting over there.
So could you give us a sense of the capital cost for the project, as well as number of hours of storage, that you would have in your projects in Maharashtra, and the associated RE that you would have to set up?
Pump storage. Are you asking about pump storage, Sumit?
Yes.
Yeah, I think we have already tied up with the government of Maharashtra for 2.8 gigawatt, which will be setting up in the next 3 years. And of course, it is basically to cater to round-the-clock delivery of renewable energy. And of course, depending upon the model, either we can sell the storage capacities or tie up separately. But that will depend once we commission the plant as to what is the need of the hour. But yeah, again, that will be a separate profit center and will be delivering its own profit.
So what is the cost you are sort of targeting for that project? Will there be 6 hours of storage? How does the project mechanics work?
So as of now, for the capacity that we are planning is roughly about 13,000 odd crores in terms of the capital outlay.
Okay. And are there any non-recurring items in Q2? We see some other income from partial sale of Unit 6 equipment of Trombay of 52 crore. And what is the treatment of this 2.3 billion rupee of Arutmin sale proceeds?
So the Arutmin sales is part of the consideration, right? It's nothing to do with the P&L. That's purely the cash flow that has come, because Arutmin was sold many years back. This was the final last leg of the consideration, which is now coming. So there's no impact of that on the P&L.
Right.
And we don't have any
impact is with other income.
Sorry?
The only P&L impact is on the other income for this Trombay Unit 6.
Yes. That's Unit 6, 50 odd crores.
Got it. There is no other non-recurring item in this result?
No, there is nothing.
Got it. Thank you so much and wish you all the best.
Thank you, Sumit.
Thank you. We have our next question from the line of Anuj Upadhyay from Investec. Please go ahead.
Hi, thanks for the opportunity, sir. Sir, question relates to the 1158 megawatt of EPC project which we have cancelled off. Could you just elaborate further which project exactly it was and why the need to cancel it off now, considering the fact that the module prices have almost come down significantly onto this?
These projects were basically where we had to do third-party EPC work, and the client was supposed to provide us the land, and they could not provide us the land and the other clearances which were required to set up these projects. So that's why it was decided that we will terminate it after we come out. And other than that, all the other projects were of course going ahead.
Okay, and considering your earlier remark to a question which was asked by a few of my colleagues, is it a shift in strategy that our focus would largely be catering to more toward the CNI category of consumers rather than the discount from the IPP scale? Because the scale of tendering which has been happening in the first half and the rate of the project winning which we are having specifically for the IPP side, it doesn't match exactly. On the other hand, we have been getting good orders on the CNI on the rooftop side. So just to understand, is there any strategic shift or calculated bidding which we are doing?
So our stand has been consistent. Those places where we will get better margin, we will execute those projects. So we have seen that in group captive, we have been able to get much better margin, and that's why we are doing. And also some of the utility scale that we have won large projects in Delhi and from Delhi Discom and then from Mumbai Discom and some of the others. We have been doing those projects. Those are typically hybrid projects. So I think focus is that we need to get better margins, and those are the type of projects.
Fair enough, sir. And on the Odisha, sir, we have been seeing, Western Odisha again reporting high AT&C losses. Is this something technical or seasonal impact which actually has led to a drop in the profitability as well over there? Or it's...
So Odisha, what is happening is, as I mentioned to you, a lot of cleaning up operations have been going on in terms of the number of consumers and the type of billing. And you have seen that in last 3 years we have replaced 25 lakh meters and discontinuing the provisional billing and cleaning up the books. So that's what we have done, and hopefully by the next 2 quarters we will have completed in all the 4 discoms. And many of the consumers who were earlier so-called ghost customers, they have been cleaned. So I think you would see that we'll bring huge amount of consistency in the Odisha operations and also ensure that proper billing and proper collection takes place.
Okay, and lastly on the Mundra, sir, so till when the Section 11 will be enforced as on date, and our expectation going ahead, considering the fact that the country is moving into a deficit zone. So I'm pretty sure that...
So Mundra right now is till June 24th, and there is as you rightly mentioned, that there is a huge demand of power, and this is expected to continue next year also. So I think for at least next 2 years, it looks like there will be a shortage of power and there will be huge demand. And we expect that if we have to meet 100% requirement, some of the imported coal plants have to operate under Section 11.
Fine, sir. If I just chip in for last question, you mentioned 13,000 odd crores as the overall capex for the PSP project. So it includes the renewable capacities as well, which will be fueling the PSP plant, or it's only the PSP equipment or the setup for which you have mentioned 13,000 crores?
This is only the PSP. The energy that will be required for pumping up will be a separate investment which will come in the renewable business.
Thank you, sir. That's all I have. Wish you good luck and very happy Diwali.
Thank you, and happy Diwali to you also.
Thank you. We have our next question from the line of Rajesh Mazumdar from B&K Securities. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. So I had a few questions. First question is on the regulated equity, which is at about 11,850 odd crores as of 30th September. So considering the capex we are planning for the next 5 years on the existing operations as well as Odisha Discoms and pumped hydro, where should we see this regulated equity, say, by FY27 or FY28?
I'm not clear. You want to respond?
Yeah, so I think this is, if you're looking at the regulated equity, it depends upon the kind of capex that is required to be done and the percentage of money that will come to the equity. So there's no direct correlation per se, right? It will all depend upon the opportunities that we'll have in the next 3 years. So, for example, this year, if we're doing a capex of, let's say, 12,000 odd crores, right, and we look at 25-30% of equity coming in, we'll also have to look at the cash flow. So yeah, I think it's a combination of various things. This per se on the regulated equity will not be able to decode and give you a perfect answer. But yes, if you see between quarter 2 of 23 and quarter 2 of 24, from 10,900 crore, this has gone up by about roughly about 1,900 odd crore. So of course, to that extent, we contribute equity, it will keep on going up. And this is, mind you, all regulated equity, which will be giving a return of 15% plus.
Right. So the pumped hydro project will not be a part of this regulated equity, or it will be separate?
Pumped hydro storage will not be part of the regulated equity. It will be separate. It is non-regulated.
Right. And how do we look at the economics of this pumped hydro project then, if we see it as a separate business?
The approach to hydro feasibility is very simple. That will enable us to kind of deliver the RTC ambitions that India have, because pure solar or pure wind will have its own limitations on a large scale deployment. And very clearly, given that we are putting up this on our own reservoirs, our capex cost and our per unit cost should be very, very competitive.
So we would be targeting the 15% ROE here also, or more than that, as per the internal IRR rate of return that we target in projects?
As Dr. Sinha said, anything that we do have to deliver us the cash, deliver us the return. So till the time that is delivered, we will not touch any project.
That is the minimum.
Okay, that's helpful, sir. And my other question was, sir, on Mundra, you mentioned that we are breaking even now. So are we breaking even at the cash level or at the PAT level? Because we have a lot of non-cash expenses as well on the interest and depreciation. So where are we breaking even, at the cash or the PAT level?
We are breaking even at the PAT level. You can say there's a slight improvement on the cash side because we'll have various adjustments for Ind AS and the depreciation that you can add back. But by and large, it's not much of a difference. So I think best to kind of consider that the PAT level. If we continue with Section 11, we like to ensure that we are at the break-even at the PAT level.
Thank you, sir. And so my last question is, do we have any merchant power sales from our existing operations? And because the merchant power rates are very lucrative and we see a lot of competition plugging in the merchant power market. And do we have any capacities there? And do we plan to increase the capacities there?
Yeah, so we have merchant power sales from our two locations. One is Haldia, which the entire capacity is for merchant capacity. Another is at Prayagraj, where there's a small quantity of merchant sale. All put together, we do not have huge capacities on merchant.
Totally, how many megawatts would be there on the merchant right now?
It's about 300. About 300 all put together.
Okay. And we don't plan to increase this significantly, or do we plan to?
No plans.
Okay. Thank you, sir. Thank you.
Thank you. We have our next question from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, sir. Thanks a lot. So, sir, for this TSP project, has the PPA been signed or do you plan to keep it open like on merchant?
No. The PPA will be signed with the renewable company, and we will package it as a 24/7 renewable power source.
Okay, so your own renewable arm will sign the PPA, but then there has to be ultimately an end party, right, who will be taking this power. So I am asking whether, do you have visibility of a guaranteed offtake from this, or how does it work? That is the question.
Right now, we've not signed up, but there are a large number of people who are interested, including Tata Steel, with whom we recently signed a group captive of 900 odd megawatts. So there are a large number of people who are interested. We need to be 100% sure as to when we will be able to offer this power. At that stage, we will sign it.
Okay. Thank you.
Thank you. We have our next question from the line of Girish from Morgan Stanley. Please go ahead.
Yeah, thanks. I had a question to the CFO. So basically on slide number 34, we have this total B, which is the gross revenue, EBITDA and PAT, and then the elimination. What I observe is at EBITDA line and PAT level, there is a YOY decrease in elimination of 1,000 crore. I wanted to understand which entities are attributing to a lower decline, negative number in EBITDA and PAT, please.
Yeah, that is correlated to the dividend. So, depending upon the dividend that we have, at a console level, it is eliminated. If you go to slide number 39, you'll find the workings over there.
And this is part of the standalone entity only, or
yes,
this is some?
That's correct. It's part of the standalone entity.
Okay, thank you.
Thank you.
Thank you. We have our next question from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thanks for taking the question again. My first suggestion, you talk about a cancellation of order. Is there any penalty associated with it, and has that already been accounted for?
No, there's no penalty. These are all third-party EPC orders and all. We cancelled it because, as I mentioned to you, they could not comply to their requirement of giving us land and some other benefits.
Okay, so this was cancelled.
I'm sorry, you're sounding muffled, Mr. Gulati.
Can you hear me well?
Yes.
Yeah, so I'm taking the 58 crore number was cancelled by IPP.
No, I didn't say IPP. These are people who wanted projects to be implemented. So there can be large number of other people also.
No, I'm just trying to understand. So who initiated the cancellation? Did you have to initiate, or did they have to initiate? The off-taker, and if they paid any penalty for that, or if he had to pay any penalty for this?
No, it's a mutually negotiated thing.
Okay. And no, it wouldn't have impacted the P&L at all?
No.
Okay, understood. Secondly, on the Mundra, when you say break even, what is the underlying debt that you assume for calculating interest?
We'll have to look at the Mundra standalone numbers and the debt over there, but the usual debt that stays in the Mundra, roughly about 11,000 to 12,000 odd crores, which is there to support the business over there.
Which includes both long-term and short-term.
Yeah, which is all long-term, short-term, commercial papers, term loans, all put together.
No, specifically for the Mundra profitability, when you attribute that break-even, there is an interest cost. So that's on the entire 11,000.
About 11,000 odd crores of debt.
Okay, so full debt is assumed, not the way it was earlier positioned separately under the SPV.
No, Mundra as a plant has its own debt portfolio, and we calculate this is that.
Okay, that's excellent. Thank you so much. That's all from my side.
Thank you. We have a next question from the line of Noel Vaz from Union Mutual Fund. Please go ahead.
Hello. I just had one question on the upcoming cell and module line. So I just wanted to know what exactly is the expected cost of production at this facility?
Sorry, could you just repeat your words?
Cost of production still being worked out. So it's a little too early to say what will be the actual cost of production. Maybe by February, March, we may be in the position to give you the exact cost of production.
Okay. That is all from me.
Thank you. We'll take our next question from the line of Gaurav Kumar from TRB Corporate Ventures. Please go ahead.
Yeah, hello, good evening, sir. And thank you for the opportunity. So I just wanted to know about your home automation and smart switches business. How is this business doing, and what are your plans to scale up this business?
So these are still work in progress, where we are trying to come up with new products as well as new solutions. So these are still very small numbers where we are trying to test the market and its viability. So at this stage, we may not be in a position to give you any specific details or that.
So you are operating this business as a separate business, strategic business unit, or does it come under consumer business?
It comes under Tata Power.
Okay, and sir, my next question is regarding supplementary PPAs that you were about to sign with the state government of Gujarat and other states as well. So have you signed this supplementary PPAs?
No, we have not signed. We are now operating under Section 11, so it's not been signed. We are waiting for some more details.
Thank you very much, sir.
Thank you. We'll take a last question from the line of Amit Binde from Morgan Stanley. Please go ahead.
Thank you for giving the opportunity. Sir, I wanted to understand that when Mundra was consolidated with standalone, it was expected that tax would be on the standalone entity, but we see that the tax is coming reflecting at around 20-25%. So why is that, and what should be the outlook on that? And the second question I wanted to understand is your capex plan for F24 and 25.
The capex plan for F20 for the next year, we are still working on a strategy. Yeah. We'll let you know as and when we complete that. With respect to the tax, it's largely around the deferred tax reversals. We do not pay any tax at the Tata Power standalone level.
Have we informed?
No, we will be informed.
So you could have informed today, na? Everyone was there.
Sorry.
No, so as I said, on a standalone basis, we do not have any cash tax payment because they are carry forward losses. So what we would see is the deferred tax reversal only. So there's no cash tax outgo.
Right. And just on the capex for this year, next year I understand you are still on the planning. For this year in H2, what should be?
Well, I think in H1 we have spent close to about 4,500 odd crore, and possibly for the full year we might land up getting between 11,000 odd crore plus minus 10%.
Sure, that was helpful. Thank you.
Thank you. I would now like to hand over the call to Dr. Sinha for closing comments. Over to you, sir.
So thank you everyone for joining for this call. And in case you have any further queries, please connect with my investor relation team. You know both Rajesh and Kasturi, and we'll be more than happy to furnish. We've tried to make the presentation much more simpler based on the feedback. So keep on giving us your feedback, and we'll try to make it more analyst friendly. And once again, wishing all of you a very happy Diwali, and hopefully we'll catch up soon. And thank you, Yashri, for arranging that.
It was my pleasure, sir. Thank you. On behalf of the Tata Power Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
ये क्या कहते हैं